Hi everyone, I'm Ken from CryptoTradingKS. If you're new, a very warm welcome and welcome back CTKS family. Here, you'll learn how to become fearless inside financial markets. This will assist you to become more of a financial and emotional blessing to yourself and those you love. In this video, I'm going to share some experiences that I've gained over nearly 40 years inside financial markets about how to manage your risk. You literally need 3 simultaneous strategies to play out: a down strategy, a neutral strategy, and an up strategy. People do think financial markets are just clear and plain sailing, not a cloud in the sky. Not a storm cloud, that is. I'm going to show you methods that I use to deal with these storm clouds when they come, and they will come. Too often, people get on the sailing boat of financial independence, and as soon as they see any adverse condition whatsoever, they just make a beeline back for the shore. You don't want to do that. You just need knowledge. I do believe until you're an expert, you should just go at spot, because even though the skies may be pretty okay, if you're using leverage and you don't know what you're doing, you're going to sink your financial ship. Many people are in such a hurry to grow their financial account, they just take so many risks. Whenever you make a loss, you're just learning something new. That's a tuition fee. But make sure you learn it. If you blame, you'll disempower yourself, and the markets are merciless until you learned what you need to learn, until you understand what's going on. The markets will take and take from you. But when you know what's going on, the markets will give and give to you. There are millions of people inside financial markets. Your gain is not another person's loss. Everybody's doing different things. Some people are going long at spot, some people are shorting under leverage, and some people are going long under leverage as well. Some people are hedging, and some people are using options. Some people are traders, some people are investors. You cannot automatically assume just because you won, somebody else lost. That's the thinking of Zone 1 and Zone 2, the barbed wire areas of life. You want certainty in terms of not what the market is doing, but what you will do if the market turns for you, turns against you, or turns nowhere. We'll cover off all those issues, and I'll go through some trades of mine to help you to understand how I deal with the markets. If you like the content, please subscribe and smash that like button. All the indicators that I use on the daily video come from the service at ctksmethod.org. Let's run the numbers. Having been trained in finance and been inside financial markets for nearly 4 decades, there's a few things that I can share with you on how to manage your risk. It's widely expected that the SEC will approve a handful of spot Bitcoin ETFs on Wednesday. Said another way, we've seen a big surge up in Bitcoin. It's joined that normalized positive price path, and with a potential Bitcoin ETF approval or approvals being announced on the 10th, there could be fireworks inside the crypto market. When it comes to risk management, we need to think that the oceans of financial markets are not always calm. In fact, they seldom are. New investors and traders think that financial markets are just like this. There are waves, but no waves that can touch you. In fact, the waves are a long way off. They happen to other people, the waves of loss. Financial markets are just like the ocean. They do get really choppy, and sometimes they get crazy. Just a little bit of trivia. This is my great-great-great-grandfather Clarkson Stanfield's painting of the island of San Michel. It's a really interesting island, but in this particular painting that he painted, which is available at the National Gallery of Victoria, and boy is it a big painting, what you will actually see is that the sea is really, really choppy, and it's caught these sailors, these people who are on the boat, off guard. They've had to flee their ship for their lives. When you're investing and trading, you do not want the seas of financial markets to wash you overboard. You need, just like good sailors and good sea captains, you need skills. You're navigating the waters of structural resistance and structural support. Right now, we've seen a big jump up in Bitcoin's price and a retracement down. How is total crypto market cap doing? It's following pretty much the standardized price path. It's neither going here nor there. It's pretty much a flat line. What about Ethereum? Ethereum started positive, touched negative, and it has been consolidating. Solana started really positive and then went very, very negative. It's starting to come back to a consolidation case. Binance Coin is not doing so well. It started positive, but it's been going down into the negative case. What about Litecoin? Litecoin started positive, as they all pretty much did, but now it's following that kind of Solana pattern, and this is not by mistake or accident, but it's on the negative side. How is ADA progressing? On average, it's below the average negative price path. What about DOGE? DOGE is not doing too well. How about XRP? As we've seen in many of these cryptos, it started positive, got a really big whack, and then it's following the negative price momentum. What the heck is going on here, you would rightfully say. And if you're doing your timing cheat sheet properly, you already know that the DXY is really strong. One thing that's really important to understand, there is a directional correlation between the S&P 500, which is that white line, and also Bitcoin, as the S&P 500 came up courtesy of the Apple bounce. Thank you, Apple. And also, we saw the US 2-year, the US 10-year, and the DXY getting rejected. That gave Bitcoin and the stock market a big push up in price. But now what's happening? It's probably better if I invert these charts so you can see more clearly. That's better. We can see that as the DXY is coming up, it's throwing negative price momentum into the S&P 500 futures and also the crypto market. And we know that Bitcoin might look pretty strong, but the crypto market is actually weak. Our key is always the same, to know where the storm clouds are gathering, to gauge the height of the wave that could come crashing and just take us into the water. We need to know where the structural support and structural resistance levels are. When we look at the US 2-year yield, and this is an important one to look at, and we pop on the indicator, what are we seeing? Just exactly what we saw in the last video. It's coming up to try to break through this 4.3897 mark. If it gets above here, the waves will be crashing inside the stock market. And that, my friends, includes Bitcoin. A lot of people are making the assumption that there's going to be a kind of Santa rally. The Santa rally did not materialize. They're thinking the same way with the spot Bitcoin ETF. It may or may not occur, and I'm going to show you it doesn't matter either way. If you manage your risk, you're going to be fine, but you must know the structural levels. You must know where the waves can come crashing and just knock you out of your financial boat. Positive air is a pretty good thing in some cases. When it comes to the US 2-year, this is not a good case. If the US 2-year just spikes up here, it's going to go and throw so much pressure on everything. I mean everything. What are we seeing with the US 10-year yield? We're seeing it's pretty positive, just like the DXY, like the 2-year. Oh, Ken, it doesn't matter. It's not connected. The Bitcoin spot ETF comes in. BlackRock's got $2 billion that it will buy, and it will make me, a small investor, rich. Because after all, that's what the institutions do. They want the little guy to win, and the little girl. Please let me know in the comments, do you think this is true or it's not true? Do you think the institutions are your friends, or do you think there's something else? I'd like to let you know, if you're in the service, that the dollar yen, silver, and Bitcoin Cash were all released, the indicators for TradingView, that gives you the structural support and resistance levels. When we look at Bitcoin Cash, we can see Bitcoin Cash is doing pretty well. There was a particular concept with Bitcoin Cash. It was dropped by the EDX exchange, the mystery exchange that the SEC approved. When the spot Bitcoin ETFs are approved, Bitcoin Cash should get a lot of attention from retail, so its indicator is back. Bitcoin Cash is a hard fork of Bitcoin. Therefore, it has the same properties that Bitcoin has. You can see it has a max supply of 21 million. We should get throw over interest into Bitcoin Cash, hence even though the EDX exchange dumped it, we're taking it up again inside the service. Please let me know in the comments, are you investing or are you trading Bitcoin and Bitcoin Cash, or just one or the other? The technical bounce that Apple came into was just such a welcome relief for the entire stock market. And look at the S&P 500, it went ballistic. But the key is, are there storm clouds gathering? To know that, we need to put on the indicator. And what do we see? We came down into structural support as Apple bounced and junk and so many things. JNK is the ticker for junk bonds. We can see that we're coming into structural resistance, and this accumulation of structural resistance levels is not a good thing for the stock market. It's going to slow that ascent down. That's what they do. Just like it slows the ascent down, these are literally safety nets, and as you go through more and more safety nets, it captures price and then flings it back. You can imagine if you were in a ship and you were in uncharted waters, you would not know if the hull would strike against rocks and sink the ship. You must have your map, and these structural support and resistance levels are the map. I'd like to do a call out to John. John has been doing his CTKS code for pretty much since it was developed. You're a legend, my friend. How do you do your risk management? For one, you need to know how the markets are moving. We can see the markets are a little bit weak inside the crypto market. But no, they're strong because total is consolidating. Oh no, that doesn't work. No, they're strong because Bitcoin just did a big green candle. What about the other alts? They didn't do so well. Oh yeah, because all the new money is going into Bitcoin. What about the old money? What's it doing? The truth is that upward price momentum in Bitcoin should just literally roll over into the alts. And it has done so to some degree, but not as much as we would expect it. To manage your risk, you need 3 simultaneous strategies. And I talked about this in the previous episode. You need a down strategy, you need a neutral strategy, you need an up strategy, all playing out at exactly the same time. But I only have one strategy. I'm in zone 1 and zone 2. I'm not really sure what I'm doing. I need certainty. What exact price is Bitcoin going to in the next 39 minutes? Financial markets are incredibly complex and they're so interdependent. You cannot have a one-way decision-making routine. You will get swept off your financial lifeboat. When you do the cheat sheet, just always remember that it only applies for that particular point in time. It's always changing. And even though there's not a lot of storm clouds around the island of St. Michel, what we can actually see, the waves were pretty rough and they just broke ships apart. When you get in your boat of financial independence, do not assume that the calm waters will remain calm if they are indeed calm. And if you don't know what you're looking at, they're always calm until they just basically capsize your boat. You need to take the financial weather conditions each day. You need to see what's actually occurring below the surface of the water. Are there storm clouds gathering on the horizon? Is the temperature changing? Is it going to get really sunny or rainy? You need to know. You can't look at yesterday's weather forecast or yesterday's weather and say, oh, it'll be exactly the same today. It doesn't work that way. It doesn't work that way in life either. You want to look at yourself as a professional sailor on the seas of financial markets. What if the spot Bitcoin ETF is not approved? Okay, you're going to get a lot of panic inside the market. People have been bidding the price up and up and up and up, but it's also come up with the stock market as well. There could be a lot of volatility, both to the upside and to the downside. Can you take advantage of that? Or are you all in and more? You bet the farm, so to speak. You're absolutely certain it's going to be approved because, after all, that's what all the all the news sources are telling you. Are the news sources there for you, or are they there for some other reason? What about a neutral case where Bitcoin and crypto doesn't do anything, it just flatlines? And what about an up case where it's approved and it just takes off? Or if it's approved and it just plummets? Have you thought about these things? Do you have an active plan to manage all three dimensions of price simultaneously? We know that the crypto market has been pretty weak, but can we make money out of the crypto market when we get a big capitulation like that? You see all those little green arrows in there? That's where I've been buying. You notice these red arrows here? That's where I'm selling. What about here when price came down? Yeah, I was buying. And what about here? Yes, I was buying. And what about this? I was selling. And what about here? I'm buying as it comes down. I don't chase price on the way up, but sometimes there are opportunities to do that. But you can see you can buy and sell under any conditions. We looked at DOGE before, and DOGE was pretty weak. Does that mean it doesn't have opportunities? Of course it has plenty of opportunities. Look at this huge capitulation. Woo, down. Yes, thank you very much. And selling. And what about when it came down? Yep, I'm in and selling. And now it's coming down. I'm buying. I have my three-way strategy always planned out. I know exactly what I'm doing. What about Ethereum? Ethereum came down like a hammer, like an anvil, and this was a little bit more choppy, which gave us some more opportunities to get in when it came down. But noticing how I'm buying, when the price melts your face off, I'm there with bells on. I'm buying. I'm buying all the time. I'm buying when it goes up. I'm buying when it goes down. And notice this buying activity. I believe that the markets are going to get really interesting, so I want to participate. I think they'll spike and they'll probably die. What about XRP? That was pretty weak. That came down hard. Buying, selling. It is no problem because I know where the safety nets and where the ceilings are. When I found out that Bitcoin Cash was not any part of the EDX exchange, I said, I'm out of here. But I believe that Bitcoin Cash could do really well. That means I'm going to start coming back in, but not at these prices, just me personally. Does it always work out? No, it doesn't. Look at Binance Coin. Binance Coin was looking really interesting, and then it just kind of died. But I can still buy and sell, but I'm never selling at a loss. And some of these percentages are phenomenal annualized percentages. What about ADA? When ADA came down, yes, buying. Selling when it goes up, buying, accumulating. This is what the institutional players do. Warren Buffett is famous, and many others are famous for saying, buy when there's blood in the streets. Why? Because you're on the right side of the percentage, and you can do really well when price spikes up. And you can see I'm back into ADA already, but these are all very, very weak. Oh, what about Bitcoin? That was certainly much better. Yes, it was much better. And there were a lot of opportunities to buy and sell, all the way up. And you can see there's a lot of sells in Bitcoin. I'll explain in a minute why I do things this way, just in case you're new to the channel. And you can see I'm accumulating here. I know the yields, the DXY, the US 2-year, the US 10-year, they're all going up, which is going to put negative momentum into the crypto market. I know the S&P 500 is reaching structural resistance, but the NASDAQ isn't looking too bad. And we could get some follow through on junk bonds. I'm ready for any specific condition that can happen inside the market. If Bitcoin absolutely tanks down, I'm waiting. I can't wait to buy on that red. And if it just explodes up, I'm ready for that one too. If it flatlines, I'm ready for that one too. You must have 3 strategies playing out simultaneously at all times. Can you miss one? What were you doing with Solana? Yep, I was buying and selling as well. Solana is really good. These percentage movements are just sensational. Thank you, Solana. If we look at the returns of the S&P 500, annualized returns, that is per annum return, just pretty much averages 10%. So you would put a 10 in this particular area. If you can turn a certain amount of money and just do 4% or 3%, it doesn't matter what it is, you can do a low percentage in 24 hours or 48 hours. You can get incredible annualized return on investments. They blow everything else out of the water. All of those little red arrows that you saw were really good gross annualized return on investments. Unfortunately, many people have this mindset. As soon as they've boarded their boat of financial freedom, if they see anything looking like a problem on the horizon, oh, there's a bit of darkness, I better turn the boat back to the shore. I better run away from the sea in my boat. But what are boats made for? They're made to be on the sea. All you need to do is to start understanding how financial markets actually work. For example, looking at my trades, I saw the storm clouds on the horizon and I said, yee-haw, thank you very much. Price is going to absolutely tank and I'm going to be there to catch it. Sometimes you'll find you're actually safest in capitulations if you know how to deal with them. You can get incredible annualized return on investments in those periods of time. I would suggest if you're only an investor, just take a little part of your portfolio and use it for trading, say 10%. Why is this? Because trading allows you to gain mastery over your emotional state, as well as helping you to do your timing. Timing means you're ready for literally anything, because you have that 3-dimensional risk management playing out. You have your 3 risk management strategies at all times. You have a strategy if price goes down. You'll buy, you'll borsog. You have a strategy if price goes neutral. You know where your structural support and resistance levels are. You can play in between those. And you know what you'll do if price goes up. When it comes to the spot Bitcoin ETF, I have no doubt whatsoever that it will be approved after the institutions have bled retail. Unfortunately, institutions just work that way. They are not benevolent. They don't care if you succeed or not, and they don't want to make you rich. They want to buy at the cheapest price possible. You might say, Ken, but this is the cheapest price possible. Well, through the futures market, they can push price down. They can also push price up, and when we look at the futures market, what are we seeing? 20.36 billion right across everything inside Bitcoin. We can also see recently that Bitcoin's price, when it went up, it liquidated all of these short positions. They were forced into buying, which raised the price up. Now it's decaying down, and we can see there's a bit of negative price momentum inside the market. That's because of the yields, the US2, the US10, and the DXY gaining strength. If that strength doesn't hold, we would expect a rally inside both markets, the stock market and the crypto market. To do your risk management properly, you need to have a very flexible mind. I've literally never heard of anybody talk about 3-dimensional strategies when it comes to risk management. It's very important that you have a down strategy, a neutral strategy, and an up strategy. If you have that, you're ahead of 95% of other people. Keep your eye on the structural levels, and just to let the service members know, the structural levels for the TradingView indicator on Bitcoin Cash, Silver, and Dollar Yen were released today. Because you've stayed to the end, I'm going to share a little bit of a bonus with you. Let's just zoom in here. We can see that Bitcoin has done really well. It just took off. Now let's throw on the structural indicator. We can see that we had a fresh air gap here, momentum, but we came into all of this barrage of structural resistance from 46 to 20 up to around that 46,740 mark. This particular area of structural once resistance and hopefully turning into support. And we've got some strong levels in here as well. If that happens, we're going up, because if we don't go below, we're going up. And this will form a consolidation flag for a certain amount of time. And we've seen this time and time again. When anything has a big force up like this and encounters very strong structural levels, it tends to just peter out over time. It needs to get its strength up again. Now, this is a little bit different, because if the spot Bitcoin ETF is approved tomorrow, I believe that Bitcoin could rally really well, and you should be ready for that. But also be ready for the alternate path. Bitcoin just tanks because they say no spot Bitcoin ETF for anyone, or they delay. Whenever people don't get their expectations met, they panic. And panic inside financial markets mean they're fleeing for the hills. They've abandoned their boats. And that's exactly the wrong time. They need to be buying on the way down and selling on the way up. What typically happens is the exact and precise opposite. They buy on the way up, and then it comes down and they sell. That's the death of 1,000 cuts. There's a lot of things you need to do to manage your risk. Many of those are mentally based. Thank you to everybody who said red in the comments. You're just awesome people. You're told by the media you should just abandon ship every time a little wave comes at you. And that's good for the media, but it's not good for you. If we see upward price momentum, where's the next level of structural resistance? Well, it's pretty light. It's very light. 48,231, and then just a little over 49,500. Things could really party inside the crypto market. That's why if you know where the safety nets and ceilings are, you're going to do really well. It's just like getting your map of the sea conditions all built in, so you can see if it's a good day to go out or a bad day to go out. And if it's a bad day to go out, that means it's just tanking down. And if it's tanking down, what are you doing? You should be buying. If it's going up, what should you be doing? If you're a trader and you want very high annualized return on investments, you should be selling. Borsog, buy on red, sell on green. If you're a trader, that's one thing, but if you're an investor, that's also a different thing. When it comes down, you should be looking to dollar cost average in, not run away from the market and dollar cost average in as the price goes up. You don't want to do that. You want to do the opposite. If you have the indicator for Bitcoin, you will note that this particular area was very structurally redirected back up. That's why I was leaning into Bitcoin, buying at structural levels and selling as it rebounded. Even though Bitcoin's price went up, I didn't wait for it to come down further like many of the other cryptos did. I was just playing around the area of recent price action, just looking for big long tail rejections down so I could sell them at crazy annualized return on investments. And there was some interesting things happening in the market. I saw through the timing cheat sheet that it could be a pretty good idea to lean in a little bit heavier. But I do not want to influence your decisions. When you get synchronized in, you will see these things for yourself. That's exactly why I shared the cheat sheet, which is really a secret. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.